Nampak is the next stock in focus. It manufactures packaging in metals, glass, paper and plastics and has a market cap of 16 billion rand. It is still pushing ahead with expansion into Africa in February 2012. The Competition Tribunal approved the merger between Nampak Products Limited and Nampak Wiegand Glass. Greg, let's start with you in terms of the African business side of Nampak and their ambitions there. Firstly, this Wiegand Glass is a company that's based in Germany. They bought back the 50% they didn't own in this company with the ambitions of moving into Africa more aggressively. And we know that they already have operations in Africa. So how's the African part of their business panning out?
Well, like everyone else, it's still a big wide frontier out there. So a lot of scope for them. But I think more than the African expansion, the key things you need to look at from an investor's point of view with Nampak, if you're an investor looking for income, 5% dividend yield. In 2009, they had about 3.5 billion rands worth of debt. That is down to about 600 million rands now, so a significant reduction in debt. I think their return on net assets is up to nearly 20%. So doing all the right things, and if they can get that expansion going in Africa, then I think the stock will outperform.
Looking at their results, Paul, really impressive results. They've sold off about 10 loss-making operations over the past while. Their full year results to the end of September showed that earnings were up from continuing operations, up by 21%. And they appear to be liked within the sector by shareholders.
Although it's been also one of those big corporates which has done poorly in recent years. When I say recent years, for the last decade or two, because it's the combination of Cola and Malbach and the original Nampak and the metal box, and it grew into a sizable player. Andrew Marshall was brought in a couple of years ago because it really was floundering. He was a dynamic young CEO that had been in the food industry down in the Cape before. I think he's done quite well. They've shipped out a lot of stuff. They've cleaned up a lot of problematic divisions and basically, shut, sold, or moved out of them. Remgro, which owned about 15% of the business, got about 14 Rand 70 when they exited in disgust a few years ago. They decided this thing wasn't coming right. There was a buyout offer from Bidvest some time ago, which for one reason or another didn't come to pass. So here they are, moving forward, trying to kind of get it together. I think the African thing is great because their forays into the UK and elsewhere, I think, were a little bit ill-considered. I don't have a major problem with them, except to say that it's a little bit so-so. It's kind of an unsexy part of the economy again, like I mentioned before, and I can't see investors getting particularly excited about it.
Well, it's quite an interesting fact there, because you talk about the UK, you talk about ex-Africa, ex-South Africa, but they're actually the largest plastic bottle supplier to Britain's dairy industry. So on that note, how are their businesses doing outside of the continent?
Well, I think if you look at, say, their corrugated business, that was doing poorly, and I think it was losing money 2009, 2010. That returned to profit in 2011, so there's been a big turnaround. But, the thing about Nampak is that everything, if you, go and buy a bottle of tomato sauce, there's a good chance that's made by Nampak. The packaging that wrap all the nappies, there's a good chance that's by Nampak. So even baked beans, the cans that it comes in. So it's a diversified business. I know Paul says it's unsexy, but a business that in this climate is giving you a 5% return on your money.
Paul only likes sexy brands like iPhones and those kinds of and electric vehicles. But yeah, so what are their greatest strengths right now?
Well, I think their great strength is the fact that they've reduced their debt significantly. It's not that millstone hanging over their neck anymore. They're increasing their return on net assets, as I've said. So I think from a financial point of view, they're doing very well. And, investors soon will begin to realize that. And I think that this, I'm giving it a hot tag, because I think that it's undervalued at these levels.
We've got to mention the Angola greenfield investment there. They put money into building the Angola Lata, the beverage manufacturing a capacity there of 750,000 cans per year. What does that mean to the company?
Well, I think it's just part of the African expansion. Angola is one of the, in terms of wealth, it's got oil, so it's probably the most expensive city in Africa to live in. Things are very expensive there. I think, 750,000 can capacity is still small. There's great opportunities for them. But as I said, for all these companies, Africa is still a vast continent that hasn't really been, the companies haven't taken advantage of yet.
Macquarie is one of the companies that like the company Nampak right now. Would you be buying the stock, hot or not? 22 Rand about there.
Definitely hot.
Definitely hot. Your views, definitely hot or not?
Well, they do manufacture cuddlers, not just the packets that they sell them in, but in fact the actual nappies themselves. And that's not going out of fashion. So look, 22.48, unless they can really do the Africa thing big time. And for me at the moment, it's still fairly early days. But if they could be perceived as the major sort of entry point into a whole asset class in Africa. So I think maybe let's give them a 5-year view, see how they develop, see whether we can get to like 50%.
Hot or not with a
currently not hot.
Currently not hot.
It's very difficult to give a hot tag to any of these stocks.